Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a fantastic day. Happy Tuesday to you. We're going to go ahead and take a look, of course, at Bitcoin. I'm going to review a few other coins as well, and obviously help us understand best practice big picture. I do hope that you can learn something here today. If you are new to the channel, just note that I'm not a financial advisor. I do, however, love teaching people to trade. So if you like learning and you want to become a better trader, CryptoCache.tech is a site, link in the description below. Check that out in your own time. I actually have a lot of really good stuff that we actually work on. In other words, today we have a roundtable discussion with our community. We get together bi-weekly essentially to kind of just stay abreast on everything, as well as the fact that I have a trading academy and of course signals too to help you kind of structure your trading lifestyle. You can either follow that or more so just use it as kind of a guideline. And I've had a lot of graduates and a lot of them are really super thrilled with the results, and me too, honestly. It's really happy to or makes me happy to be a part of people's lives like that. So thank you so much in that regard. Why don't we go ahead and take a look at Bitcoin? Pretty I hate to start with standard stuff because it really is, but a lot of these candle wicks up and down are essentially just the support and resistance levels getting retested. We're effectively range bound from 20,700 upwards to 21,700. So it's this little 5% range, so to speak, where the price keeps getting rejected, comes back down to retest each level. When it does this, I don't particularly love it because of the fact that it's kind of proving to be difficult in that sense. But on the same accord, there is some consistency we can look at. We'll circle back around to that in a moment. First things first, let's look at the standard stuff. And just to kind of summarize, monthly and weekly, we're underneath key level resistances, such as simple moving averages and the RSI 50. And it's important to recognize that this candlestick kind of screwed us in the simple sense that those are no longer considered support levels, right? That's the main reason why it dumped so hard, is because of that simple fact, whereas traditional markets were down like 3 or 4% that day too. So definitely some difficulty there. Touching on the traditional markets, they're kind of drawing dead right now. They're both setting up in doji candle type of patterns. The trading day is too early right now for the moment to really recognize that. But generally speaking, if you see, we've got some gravestone doji, so if the price does close there, it could effectively come down lower and break below this current support level. And that would be disadvantageous in a sense, where that could actually bring Bitcoin down with it. All right. Also bear in mind here too that the dollar index is getting rejected at a key level resistance. So it could very well be a cup and handle type of pattern here, where the price action will eventually break out. And once it does, Bitcoin would effectively dead cat and come back down. Right, again, there's just kind of an inverse pairing there, and we just got to recognize it. It's not foolproof by any stretch, but it definitely is relevant. Taking a look at the GAN fan as well here, we can kind of see that this lower support and resistance level is kind of just giving us the indication that we are still stuck underneath. While the price action could continue to progress higher, we're kind of still underneath that level. And that's disadvantageous in most cases because those are support and resistance levels, right? And again, GAN fan is interesting. It's a really cool tool to use. It's basically just taking specific percentiles and drawing out those levels based on the most recent low and the most recent high. So if you see, again, it's kind of funky when you zoom out, but, oh wait, GAN fan, hold on. Sorry, it disappeared on me. I'll have to add it back. Let's get it back here. All right, so what I was trying to show here is the simple fact that what it does is it effectively takes the most recent low and then takes essentially the highest point in which the price was, which was basically almost 70,000, right? So from 70,000, we've got these lines drawn down, and then from, of course, the lowest, most recent point at 17,000. So essentially that's where it's coming from. That's where GAN fan is effectively creating those lines, is it's all based on just kind of specific angles. I don't have those all memorized, but they're generally very beneficial. I do plan to make a video regarding that, so you can kind of understand what that looks like and how to set it up yourself if you don't have like the traditional indicator. So anyways, that's kind of where we're at there in that sense. So just generally speaking, we have some key level resistances. Big surprise, they're right there at 21,700 / 21,600. And the reason why 21.6 is definitely a key level resistance is because we had it stuck here for some time before it broke above. It had to retest 3 or 4, actually no, that's more like 5 or 6 times, but 3 different settings for 3 or 4 days in a row before it broke above. So hypothetically, we could break above if it continues, because we are in essence creating an ascending type of trend. All right, so hypothetically, we could experience a break to the upside. I wouldn't be surprised if we do. Just note, dollar index comes down and back up again to break its key level resistance with that cup and handle potential pattern. We could very well see the inverse here, where the price action comes up, gets rejected by the 50-day simple moving average, and moves its way down. I think that's a strong potential likelihood. That's just my thoughts there. All right, so anyways, that's kind of where we're at here so far. So it does kind of look like, based on just the pattern that we're seeing here, that the price action could increase higher and inevitably break 21,700. Now, how hard will it break? Maybe not. It might need a few more days and reject down. It's hard to specifically say, but it does feel like it's kind of shaping up for that. But once again, we're underneath 50 on the RSI, so that 50 on the RSI is very much concurrent with 22,500 on the price action up there with the 50-day simple moving average. We've also got a slight difference here, not much, but if you can kind of see, there is a little bit of a break here in the momentum to the downside. Obviously, that's based on the price action increasing after such a strong decrease in price. So in that sense, if we kind of think about it abstractly, we're still very much bearish. However, that's kind of giving us an indication that the bears are losing a little bit of control. Right now, if we close in a doji candle right here, that could indicate we could see potential for upside or downside. I know it seems stupid because of the simple fact that obviously it's going to go up or down, right? But points like these, I like to kind of sit and kind of wait and, we need more confirmation than just seeing a doji candle or, an ascending type of pattern, right? So let's see if we can find that in other time frames. I'm willing to guess we don't have it, and it's going to likely be fairly conflicting, but let's double check. All right, so on the 4-hour, we're trending above, tentatively, of course, the 20-day simple moving average. I don't put a lot of weight into that. I don't think that's super relevant. We are under 50 on the RSI, potentially getting rejected there, of course, but the more we continue to retry, the more likely it is to break. So there is a possibility we could see 50 on the RSI broken, obviously with that 21,700 resistance. So some shorts could get squeezed out at that level, because obviously that's a case in point where a lot of shorts are they probably have their stop loss at 21.8 or 21.9. There's a good chance of that. At least that's how I would approach it, because it's above a key level resistance. Taking a look at the 1 hour though, here's one thing we kind of want to see, and this is the one I'm most curious about, is the cloud. Okay, so we got some positive here, but also not, right? So for example, let's just address the obvious. Lagging span is intersecting with price action, and even if it were to clear, just say it goes sideways for some time, it'll still kind of be stuck in the price action. So it's not really giving us a full-on effect of like, hey, we want to take a position. The difference here, though, is that the conversion line's above the baseline. That is helpful. That tells us we have kind of a convergence, divergence type of situation where the price is converged upwards. So that moving average is effectively telling us that. We're also above the cloud, and we have been for some time. So that's positive in a sense, but also, in my opinion, disadvantageous based on the fact that this is a very, very weak cloud, and it doesn't really matter too much. The tighter the cloud is, the more likely it is to break, and the less relevant it becomes. Okay, so to me personally, when we see this, I don't feel like we have true on confirmation, even though we are above the cloud and the conversion line's over the baseline. It still doesn't feel right. Again, based on what we've looked at so far, the overall sense, the macro looks bearish, but the micro is looking slightly, and I emphasize this word, slightly bullish, only because we have some nice patterns. But you got to keep in mind, like, we keep getting these little resets, right? Where we kept making lower lows, and now we're making higher highs and higher lows, but they keep going back and forth, and it's just creating a very difficult market to trade in, especially if you're day trading. So please just be cautious and careful. It's the main reason why I gravitate more towards swing trading, because Bitcoin is sometimes a bitch, and it just really just can wreck your world if you have your stop loss is in the wrong place. So again, trailing stop loss at the very least, make sure you have something like that, and use that effectively. But in truth, there's not a tremendous amount of things we can go on here to tell us where we're at. We can go a little deeper. We can maybe take a look at the 15 and perhaps see kind of where we're at here. We could see the price action got outside the upper standard deviation there on the Bollinger Bands, but it's working right within and kind of trending below for the moment. So hypothetically at this point, again, no trade is good trade. It's kind of the standard I like to fall back on for situations like this. And I like to emphasize that because, newer traders will just jump at the first opportunity they get, right? I mean, I'll send a signal and everyone jumps on in a lot of cases, and that's well and good, don't get wrong, because I have more confidence in what I've been doing for all this time, right, for quite a few years. But when you're a newer trader, you've got to exercise patience. It's difficult and it can be hard, but it's absolutely relevant and something you need to do. I know it sucks when you're being patient and the price goes higher and you could have been in a long time ago. There's that, of course, that's always going to happen. You're going to miss out. But, you're also going to increase your odds of success if you are patient, wait for confirmation. So to me personally, I'd much rather wait for the price to break above 21,700 and then take a long versus taking it right now and hoping it goes past that point, right? Again, different schools of thought, but at this level, Bitcoin does look like it wants to continue to break down lower. However, in the short term, I would not be surprised we see a dead cat bounce. The price action comes up here, gets rejected somewhere in the range of 22.5 and comes back down. Meanwhile, the dollar index is doing the exact opposite with a potential, again, cup and handle pattern. So there's a lot of different schools of thought. Which one works best for you? You figure it out and you let me know. Feel free to comment below, obviously, if you have any questions or concerns. I'd love to help you out, of course. And obviously, you want to become a better trader, attend my trading academy. And of course, I have a lot of signals that I send out. We've took some decent profits yesterday, believe it or not, to the downside on some of those candle wicks down from Bitcoin. Right? And what I think we traded ENS and a couple of others. And it was a really good experience. It worked out really well. Oh, Adam was the other one, actually. And, it wasn't massive profits, but you got to take what you can get when you're range bound like this. You can't try to get overly aggressive and take super large gains. Small stuff wins the race, right? Slow and steady wins the race, the whole 9 yards there. So again, looking forward to tomorrow, seeing what's going on, and obviously looking forward to our roundtable discussion here today in roughly an hour for my community members. Looking forward to that. Hope you have a great rest of your day. We'll see you in the next one. Thank you so much. We'll see you.